Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to do our daily technical analysis update, looking at the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to give you my financial opinions as we go. And if you need any help with anything, check out finding-value.com. We have a 50% discount coupon code going on for the monthly membership. September is that coupon code. So let's dive in. Let's see what's going on with the markets. And the DXY, again, it's just a relative strength indicator continuing to move higher. What that is telling us is that our monetary policies are tighter than other monetary policies that the dollar is being compared against. So what that means is generally it's our interest rates going up at a faster pace than other interest rates currencies. It's an imbalance there. So the DXY is continuing to go up. That's most likely signaling higher yields. So when we look at yields, the 2-year is still resilient. We are still sitting on top of this breakout here. And we're just kind of resting on the 2-year, trying to figure out, are we gonna surge higher again? Generally, you break out, you do a retest, which here's your breakout there, and there's your retest there. Generally, that goes higher. Sometimes at the end of trend, you get a false surge higher and it breaks back down. That is possible, but we'll see. To me, it looks like yields still want to go higher. You look at the 10-year yield, that looks pretty strong, like it wants to continue higher. So that still looks like it wants to go up, and the 30-year also looks incredibly strong, like it wants to continue higher in yields. What does this mean? Well, yields going up generally means it's a strong headwind for anything that has a cash flow stream in the future. Because when you discount it back using the 10-year yield, which is this yield here, as this goes up, the net present value calculations of stocks goes down. So companies that are heavily dependent on growth, where the majority of their valuation is out in the future for future cash flow, high growth companies, they generally get hit in an increasing interest rate environment like this. So they generally go down. The value stocks, which are cheap in relationship to the current cash flows that they have today, don't really respond as much to the increase in the interest rates. Keep in mind that stocks are in competition with bonds, and bonds interest rates continue to surge to the upside. So you've got that dynamic going on in the markets. Generally speaking, the increase of interest rates will weigh heavily on the NASDAQ and the S&P 500. The TYX-TNX ratio, now this is a ratio of basically the yield curve inverting and whatnot. We are at a very low level, which means the yield curve is inverted. Generally speaking, when the yield curve inverts, that's your interest rates going up. Then you hit a point where we base out, and then you generally bottom and you start to move higher where the yield curve uninverts. What that means is it's telling us where we are in the real estate cycle. It's telling us that we've got inflation, we've got slowing of inflation, and then we have a potential crash or a slowdown in the market. Maybe not a crash, but a slowdown in the market is possible when all of this kind of unwinds. So this has been coming up, but it's been from increasing yields on the long end of the curve versus the short end. It's called a bear steepener. It doesn't happen often in the markets, and we are getting it today. And if you want to look to see what that is, Google it up, bear steepener, and the long end of the curve going up faster than the short end of the curve. It's basically pricing in longer term inflation. TLT continuing to go down with those interest rates. It's inverse of interest rates. And we're still seeing that selling pressure in bonds at this moment. So we were down 0.35% today. Gold doesn't like the stronger yields and stronger dollar. Doesn't like it. This has broken the support level to the downside, but we're still above the stronger support level of this bigger downward motion there, that downtrend line here. We're still above that, but we've broken this kind of this short-term trend line to the upside. So is there further downside ahead of us? I think what gold's trying to price in is that perhaps our government and or Federal Reserve Bank is going to print money to do quantitative easing, which is going to be inflationary, and it's going to be sacrificing the dollar for the bond market because bonds are basically crashing. And I think gold was pricing that in, and it hasn't occurred yet. So gold's selling off a little bit, saying, hey, are they going to save this thing, or are they just going to let the bond market crash? Silver's doing the same thing. We're still within the pattern of silver, but we were down a little bit today. And platinum's doing the same thing. Down a little bit. We do have a little wick at the bottom, but nonetheless, it's down. XEU to gold doesn't like it. It is selling off. You can see the break to the downside. So we are moving lower in the gold to gold and silver mining, or I should say gold and silver mining companies in relationship to gold. It is breaking to the downside. Doesn't look too hot. We don't want to break this horizontal support level. Otherwise, we would be in another downtrend. The CRB index is holding steady today. There it is coming back, and I do think we could hit this line down there. Possible. And then the CRB to S&P 500 is moving on up. So what that means is that we had a rough day today. Everything was kind of down for the most part. But commodities are holding more steady than the S&P 500. And that's exactly what we were thinking was going to happen. That commodities on down days are going to be down less, and on up days, they're going to be up more. There's still maybe perhaps a slight correlation where they both go down and they both go up together, but commodities are they're going to go up a lot and then inch back, go up a lot and inch back in that type of movement. And that's exactly what we're seeing. The green army and the small red selling days is that big up, inch back, big up, inch back. And we're just inching forward this ratio to the upside where commodities are going to buy a lot more stocks out in the future. Looks fantastic from a long-term big picture view, and this is probably the start of another big long-term wave. GDX selling off, doesn't like the market conditions right now. This is a bear flag, and we've broken it to the downside, so we could see further downside in some of the gold and silver mining companies. GDXJ doing the same thing, and SILJ also doing the same thing. We are losing the support level or line that we had here, and we're starting to break to the downside for these mining companies. Crude oil. Now, crude oil and interest rates are interconnected, and crude oil is looking, I think, pretty good. It is holding up at the moment. What I like to see in charts is I like to see these go up, and then you generally have a sloping downward pullback or consolidation. Then it breaks to the upside. We don't want to see a upward like rising wedge or a rising type thing where we squeeze kind of up into the corner like that. That's generally a topping pattern. I don't see any of that in this chart here. So this to me looks like it's just consolidating with a pattern. So it's basically a flag pattern at this time. And there isn't much selling pressure going on over here. There's no big reversal candlesticks, no big down red bearish engulfings. There's nothing really going on there right now. So it still looks good to me for this to continue higher with the way that it looks at this time. TTF gas, we're getting a little bit of a reversal candlestick today, but it's still looking fantastic. We've got support underneath us, the white line. This could come back and hit support and go. But this was basically a breakout yesterday. And I do think this is going to work its way on higher over time. So this is basically your downward move. Let me go to the weeklies here, guys. A little bit easier to see. Your downward move. This is your basing pattern here. And then we're going to break and move on up. And that's what I'm seeing in this chart here. Natural gas in America up a little bit today. but we're still kind of basing out here. We're still trying to find or grasp this base and really start to move on up from the base. So we haven't moved up yet. We're just basing out still. XOP, yeah, you know me. This is a bullish engulfing yesterday. I am still thinking that this could go higher, and we'll have to see what kind of oomph it has behind it. With oil where it's at, I expect this to work its way on up with time. Bigger picture view, this is an inverted head and shoulders, shoulder, head, shoulder. The neckline's right there. We're trying to break through that neckline. That's what's giving us a little bit of resistance in the short term. So we hit our head. We got a bearish engulfing there. It's going to head lower. We headed lower, and now we've got bullish engulfing there, and that's going to generally work its way on up. Again, let's see what happens. OIH also looking good. We had a bullish engulfing yesterday. I'm still of the mindset that this could go higher, and we want to see what type of movement we're going to get, how much force is behind it. We've got the Sprott Physical Uranium Trust. It's down a little bit. It's not a reversal candlestick, guys. We have been on fire. Look at that. Just an absolute outperformance. It is normal for this to consolidate sideways or maybe even come back a little bit. But again, things are moving fast, and this could reverse and go up at any second. So my plan is to stay in it and not be trading in and out. I'm not going to try to trade the in and out. I'm just going to hold on to it and let it ride. So again, let's see if we get a little bit of a pullback here. You can see that there's a little bit on, this is on a weekly candlestick, a little bit of a wick at the top. But again, it can reverse quite quickly. I don't want to state that this weekly candlestick will stay like this throughout the week. So let's monitor it together. URA also selling off a little bit, but it's not a reversal candlestick. It's just a down day today. And we are next to a very large up candlestick from yesterday. So again, if we were to zoom in on the short term, you can see that we kind of squeezed up here. It looked like it was going to break to the top, and then we came back down with some selling pressure. And it's basically, how can I say it, resting a little bit and resetting itself to some degree is what I'll say it's doing. But it still looks all right, and we'll just have to wait and see what the rest of this week has in store. Uranium's got the same thing. That's kind of like that bloody nose is what I talk about. A bloody nose is a small profit-taking day. It's not a reversal candlestick, and we could easily continue higher if the buyers step in here and want to push it. Think of it on a short-term thing as kind of like a flag pattern. That's kind of how you want to look at it. You can see that we have a bullish engulfing on the really, really short-term 5-minute mark. So that's what that candlestick looks like. It's basically kind of like a flag pattern or a pennant pattern on a very short-term basis is a bloody nose. URNJ's got the same thing. It's a bloody nose. If we were kind of zoom in there, it's price action where things go sideways. Think of it as kind of like a channel or a, if it's going down a flag or some sort of like pennant formation. So that's what's going on with uranium right now. Just a little bit of selling pressure, and we'll see where it goes from there. TAN, this is heading a little bit lower. Again, I think we're going to 48, and the overall markets do not look good, and TAN does not like increasing commodity prices with increasing interest rates. It's not a very good mix there for it. COPX down a little bit. We're still within the channel going sideways here. There it is right now, and I do think this could go back to the lower end of the channel. Lithium down, looks like we could break out of this support trend line to the downside. What's going on here? Well, I mean, we very well could come back here and retest that with a slowdown in the overall markets if interest rates continue to work its way on higher. These stocks are all just a derivative of the interest rate. Lowering interest rates is a big push behind it. Increasing interest rates can definitely slow down some of these sectors. REMX, same thing. We continue to head lower. We could be seeing a slowdown in the overall markets, and I'll show you that slowdown in the overall markets, the S&P and stuff, which is next right here. The S&P selling off today. Doesn't like stronger dollar, doesn't like higher yields. This is starting to accelerate. We've got lots of momentum. It started here, bearish engulfing, And these add up, and it weighs on it where we have a sell-off here. So that is what we're seeing in the markets right now, is yields weighing on the S&P 500 and also the NASDAQ, and it is selling off in the short term. Emerging markets, it's the same thing. Stronger dollar, stronger yields, and emerging markets aren't going to like that. These guys are, they work higher when you have a declining interest rate environment and a weaker dollar. XHB also getting a little bit more selling pressure today. That could go lower depending on what yields do and bond prices. Moo also selling off. Again, the momentum's to the downside. We need to see some candlesticks reverse that. We've got copper's been hanging in there. It wants to go higher, but with yields continuing to go up, I think it's feeling the pressure of those yields and the overall market kind of weighing or sagging on it with the selling pressure in S&P and NASDAQ. Now, iron ore is kind of shrugging it off. Iron ore looks really strong. There's your falling wedge. That still looks good to go higher. We've got nickel that is a lot more robust today. But again, I'm not jumping in front of this. I don't see the green army showing up yet. Let's just wait. Aluminum looks really strong in relationship to everything else. And this looks like we're just squeezing up on top of a breakout, which means we could break to the upside here. Baltic Dry Index remaining very resilient, looks very strong to go keep going to the upside, like iron ore. Coal also up 2.88. Again, I think this is going to work its way on up over time, and this is just a retest breaking out of this base. Good spot to be looking at it. Bitcoin down a little bit. Surprising it's not down even more. And Ethereum sideways. It's holding on given where the dollar and interest rates are at. So that's what we're seeing. Kind of a big selling pressure day across the board with yields continuing to go up. DXY is going up, which is just a derivative of the yields as well. So yields going up is pricing these assets lower. And that's what we expected. That is what we expected. It didn't impact the price of oil, but it did impact the equities of oil and a lot of energy service companies. And people are going to say, well, how come? Why is that the case? Well, sometimes equities behave as equities. They don't behave like a commodity would. And you'll get a sell everything type of event for a period of time. And it seems like that's what's happening right now. And what I would do is, it's like, okay, focus on the commodity. Is the commodity going up? Yes. Is it going to impact their cash flow in a positive way? Yes. Well, over time, it's most likely going to be a positive thing for energy companies with the price of oil and natural gas going up. So just be patient. We want to find those valuation gaps in the market that we invest in the undervalued asset with improving commodity prices or improving prices of whatever services they sell. And then we just ride it. You just be patient and ride it. So if you guys need any help, if you want to talk individual companies and all that stuff, you can check out finding-value.com. Again, September coupon code 50% off. And we do have a question and answer session coming up on Saturday, 7 a.m. is the next question and answer session. We also have a midweek update that I'll release tomorrow if you're a member. All right, guys, we'll catch you later. This is Finding Value.